Good morning, everyone. Hope you can hear me. So just to let you know, the way we trade in the Chart Patterns Mastery Room is singles and doubles. I think Roggy does the same kind of thing. And who's been doing this the longest successfully? Me and Roggy and Neil and Bruce. So just keep in mind that singles and doubles. To give you, for instance, what did we do today? Today, we bought a butterfly in Home Depot and sold a butterfly in Home Depot, made our 20%. And it's not a 10-cent option. So it's not a 10 cent. It was a $3.89 option. We sold at $4.70. So not bad. I'll show you. So this is what we did. So we just did this. We did this right here. Not 99, 87. Sorry, 3.87. And where did we sell it? We sold it at 470. There. I mean, that's not bad. We did it yesterday with gold. Every day we slowly are making money. So not home runs, but on the other hand, you're not having drawdowns. But I wanted to show you something because I know that I did a thing on the art of short selling, and there's a time and a place for that, no doubt. But I wanted to show you this, that it's not just about shorting. So we look at indicators, we look at correlations, we look at fundamental data. I mean, that's all the stuff I've accumulated over years. I can't press a button for you, but I can sure show you the right direction. But you go into Chart Patterns Mastery and you go to the dashboard menu and you go to nightly charts. And I just want to show you that every chart I showed Sunday night was a bullish pattern, believe it or not. Yeah, watch it not work now that I'm trying to show it. But every one I showed, let's see if we can get it to work. No, it's not going to. There we go. So I do them Sunday night. And here you go. Then you make it bigger. This is free to my subscribers. And what are you going to notice in here? I usually show the earnings. I show the economic reports. And go and check out some of these things I showed. Showed Apple, but that was a non-event. First Solar, yeah, it's only up 10 points. TTD at 50. Where's Trade Desk now? Do you see the little bull flags? Well, this stock is 52. Datadog is 98. DUOL. Let's look at that one. That's an obscure one. Yeah, it's only 50 points higher. 50 points higher. So that's what I'm telling you. I look at long ideas too. So I just want you to know that there's a time and a place. I look for good patterns. This is 277. So all I know is percentage-wise, I think most of these will work. This is 584. So CrowdStrike's up. That's over 400. So ACHR, I'm just telling you that we don't just do short ideas whatsoever. We do chart ideas. That's why it's called Chart Patterns Mastery. So we'll show longs, we'll show shorts. But you might ask, well, how the heck did you find DUOL? So now I'm not Mr. Squeeze. I use consolidation patterns. And when I do a scan, a lot of times they show up as a squeeze if it has a tight consolidation. I think just looking for a squeeze, that's not the way I do it. I look at it to find a tight consolidation. I just want to make that clear. So I'll show you what we're talking about. So go back into here, and I want to go and show you 6 time frames. A lot of times I'll do it this way. So now you might say, why were you looking for long ideas? Because after the rally from a couple of weeks ago, in fact, I'll show you this first. So after the rally a couple of weeks ago, right there, most of the time after that kind of sell-off, you don't go to new highs, but you slowly go up like that. So, and I'll show you. This is from Justin Mammoth's book that was one of my Bibles growing up, not growing up, but when I first started trading. And basically, he showed a sentiment cycle that's now worked for since 1929. So what are we talking about? We're talking about this enthusiasm, the first break, the consolidation, the panic, which is where I think we just were, the sharp short squeeze, and then you consolidate or slightly wedge up for weeks and weeks. So the bottoms usually when you form an inverse head and shoulders months later, because that damage takes a lot of time to work off. Now, that being said, that doesn't mean, oh, I'm not going to trade at all. Some of the most money I've ever made is being long, is finding long ideas in a bear market, because you get these vicious rallies. But that's what I want to show you. Does anybody see the similarity? I don't know about you, but this sure looks the same. Then you have the sell-off on the right and the sell-off over here on the left. See that? Then this is by going on basically 100 years of data. You then got the panic, and then the futz around. The futz around means working off the oversold condition on a weekly chart. And it usually resolves itself by slowly going up. Now, you might say, well, wasn't this like an inverse head and shoulders right here? It's all the moving averages are sloping down. So you haven't had the loss of momentum enough for it to turn around. That's why when you see this and everybody's saying, oh, inverse head and shoulders, it's an inverse head and shoulders against massive resistance. That's not to be trusted. So right now, it looks to me like you're in this area. You're in the area that's going to futz around for weeks. Now, I use on the bottom a 3-10-16 MACD. You can use an RSI. You can use any kind of oscillator. But the point of the matter is this. The point of the matter is, if I'm right that you're going to futz in this area, well, you're going to be able to find some bullish patterns. The other thing, when you have sell-offs, long-term sell-offs, 1980, 2015, you have a lot of stocks that are already starting to turn up. So that's why I showed some long ideas. You got to have some long ideas in your hip pocket because you get these vicious short squeezes. So let me show you what we're talking about. I'm talking about that when the markets went down a little. So when the markets went down a little, because this is getting to why I did this in the first place. So when you got the markets to sell off, so this was on StockTwits. I hope you follow me on StockTwits. So I think we're stuck in a zone that's going to slowly go up. So if you're wondering on StockTwits, I post a lot of charts, a ton. I try to post every day. So this is my link on StockTwits. Now you might ask, and I know I've repeated this, but the point is that the charts I post, if I put them in the chat, they erase overnight. So I have like a running diary, so to speak, in StockTwits. And one of the ones I put in StockTwits was this. We're stuck between this and the congressional bottom. What do I mean by congressional bottom? This is where Congress was tape racing. They bought before Trump eased up on his rhetoric, April 7th and April 8th. So if you went down to there, darn right, you're going to get the administration to start propping up the market. So you're sort of bound by 5,100. So once it got down to that area, I was looking for stocks that already had bull flags. So if this rallied, those would be the first to go up. That's the theory. So that the ones that already had good charts were more likely to lead to the upside. So right now, I think you see it from here. You got the resistance there. You got the support where the Congress was buying. They're not going to let the Congress people go underwater if they can help it. So that would put the markets in this kind of area. Now, this is from days ago. Fast forward to where it is now. It's already up here. Already up here. So far, I've called it perfect for you. Congressional bottom. Now you're getting up to massive resistance. That's where you are. But when you saw this rally, you go for the stocks that were acting the best. So let me show you on how we scan for them at least and why I put them on the Sunday night charts. Go and take Datadog. There's your squeeze. So there was also a squeeze on an hourly. But if you didn't want to do that, just visually observe it. So if you see this, but it's in a tight range, you know, like up here and up here and up here, well, guess what? It's not that tight a range, but it's going to have a contraction volatility. That is not what I'm looking for. I'm looking for this. That sure looks like a bull flag to me. That's why I posted it. So the second that started turning and the markets turned, it took off. So look at that right there. Now, that didn't have a squeeze on a daily. It did have a squeeze on a 4-hour. So the second thing you want to know, were they in an uptrend? That's a little point of contention because a bull flag and a downtrend is less likely to work. It's hard to buy at 95 when it was just 88. When we see this, we try to anticipate. So number one, I thought the market would rally from the congressional support. So that meant these were more likely to rally, but they hadn't rallied yet. So we did a spread, the 87, 94, like 98, a broken wing call fly because we thought it would go up. We just weren't sure the exact date. And we made like 30%. So you could have bought a vertical call spread, but you didn't. It was still in a downtrend. Like you see, it got above it, but in a downtrend, it didn't work. But it wasn't as tight a pattern. So all I did was take a squeeze. And if you want something that's trying to turn the corner, you could go to an hourly. Was it above something on an hourly? Yeah, it was above the ATR trailing stop here. So I'll show you. Take DUOL. You know, the stock took off. There. Did that have a squeeze? It sure as heck did. Look at that. Had a squeeze in here. Did it have it on a daily? Yeah, it sure did. So you could do a daily or a 4-hour. And on an hourly, was it already in an uptrend? It sure was. So I'll show you a way to scan for it. So you can take every stock if you want, because all of a sudden there are pockets of strength in all shapes and sizes of areas. So I thought I'd show you this. So you go into here, and I can show you two ways to do it. Now, it's going to be hindsight. We've already had a massive rally, but I'll show you one way to do it. So first thing, I can share this grid. I'm happy to share the grid. Nothing's proprietary. So I just did a grid of daily, 4-hour, 1 hour, 15, 5, and 1. You're going to see in here that I'm using that to reverse engineer a scan. That's all I'm doing. Reverse engineering a scan. There. So let me share this with you in the Essentials room. And this is, I mean, this was already shared in the Chart Patterns Mastery room, so you could find them. So this is how we did it. I like optionable stocks. I like stocks that are active. This isn't that active, but it worked. So let me just show you. We took a scan. Remember, go back and reverse engineer. Go to Datadog as your poster child. You got a squeeze on a 4-hour. And it was over the ATR trailing stop on an hourly. So guess what? You do a squeeze like that. So let me show you. So you do a 4-hour squeeze over the 1-hour ATR trailing stop. That's it. Now, the problem with this is you're going to have 8 million stocks. You're going to have a 50-cent stock in there. You're going to have a $1,000 stock. You're going to have a stock that trades 100 shares. So you can't do it exactly like this. I'll show you what I mean. Remember, if you want to make good money in the long run, you got to have liquid stocks so you can scale accordingly. So you're going to see there's going to be 1,000 stocks probably. Yeah, 2,000 stocks. All right. Next thing, you want to add another filter. I want all optionable. I like trading options. And I'll show you the reason. Just remind me about ACHR. No, I want all stocks. I'm not trading futures. There, all stocks, all optionable. So instead of 2018, it's going to pare down to 1500. Too many to even think of scanning. Now what you're going to do is add another filter. I want the stock, the last, like over 3. There. Now how many is it? Well, let's see. Instead of 1500, you're down to 1300. That still doesn't help you, but they're going to be a lot with like 6,000 volume. So yeah, you go to another filter. It's under study and you add average volume. You want it, let's say, over 300,000. Now you might say current volume, but if you scan at 8 in the morning, it's not going to show any volume. So now you're doing 300,000 instead of 1,313, you're at 1,000. That's better. Still 1,000 stocks with a 4-hour squeeze. Too many. Next thing, though, is to add open interest because I want optional. It doesn't have average volume as a study of options, like average option volume. So all I do is I take open interest of at least 2,000. That's personal preference. All of these are personal preference. Volume, open interest, last. Now, there are 2 other things you got to understand. One, there you go, 494. That's a heck of a lot better. So I can save this for you. Save scan as 4-hour and not a main squeeze. All stocks. And we're doing a 4-hour squeeze. So I'm going to share this with you. I can't share it in the YouTube live, but this is the kind of stuff we use. Now, once I press that, this is going to reset, so you got to go back to it. Now, I have a main list of the most active stocks, and I'll do that one also. And then you don't need last and open interest and all that stuff. But now I'm going to go back. This is why I dated, so I remember where it is. So you go to, because I have a lot of scans. So I'm always trying to find scans for everyone. If we're trying to find longs and shorts. So I just dated it as April 24th. So it's a lot easier than looking at every single one. So where's April 24th? It's going to be under all, obviously. For all. Where is it? There we go. And there you go. So let me share that with you. It's a real handy scan to do your own research. And then I know it's 400 stocks. That's a lot. But then it comes down to, well, the Russell is underperformed. So definitely, if the Russell starts outperforming, there. If the Russell starts outperforming, then you're going to want to change this to like between 3 and 30. So that kind of thing. If you want to go for the big stocks first, you can make that 100. But I just want to show you get that. Now, because you saved it, it actually becomes a watch list. It's fascinating. So over here, you go for all. And it'll have every one. So you're looking for stocks with a consolidation that are also on over their 1 hour. Now, this isn't for today. And the reason it's not for today is because the markets have already had a heck of a rally. If they're consolidating now, they're actually showing relative weakness because they're not following the market. But that kind of idea. By the way, chart patterns mastery. Yeah, I got out of Home Depot too early. That butterfly you bought, at 387 is a lot higher now. So if you didn't get out at 470, man, it's going to be a lot higher. Nah, it's the same, but still a good trade. Good, easy double. I mean, not a single or a double, not double your money. You made about 20%. And it's an expensive flyer. Worked great because you were betting on these stocks that are tariff news related and at resistance doing nothing. And that's what worked. So, and like I said, I'm looking at stocks that are already establishing an uptrend. That's all. Reverse engineering. Reverse engineering of stocks that are already in a temporary uptrend like Datadog. Like I said, reverse engineering. 1 hour over the ATR trailing stop. Because the other one, when I did these before, none were over anything. So I had to use a 1 hour ATR trailing stop. So that's why I did that. So when you add these in here, is Home Depot really a squeeze? Not really. Doesn't look like a bull flag to me. So I'm just telling you, that's how I've done it. So other times it'll do this. It'll be better, but I'll show you an example of why you had to do it like this. We liked ACHR at 750. So do you see on how it's under the ATR trailing stop and under the 50? By the time it got above it, already it was 820. So I had to find something that was already consolidating over it on a shorter term basis. So there's your bull squeeze, and it exploded. So over the ATR trailing stop on an hourly, so it's already turning the corner somewhat. And it had a squeeze on a 4 hour. Plus, if you visually inspect it, it looked like a bull flag. That's why I liked it. So that's the reason. So when you go over all these, you're going to see the big stocks have already had a heck of a move. ServiceNow, DUOL, Broadcom, stuff like that. So usually what I'll do is I'll change this, figuring the cheap stocks are going to catch up. Like I said, I'm not doing it now. I think it's a little late in the party, but I'll show you anyway. So here's just from 3 to 30. So you're taking the second tier. If the expensive ones have gone up, a lot of times then the other ones do. So the other ones follow. And one of the reasons is if you're up a lot of money in ServiceNow, you have more money to speculate. So when you take that 244, what I do then, I have it as, I could make it in a watch list, but I just made it easy for you, 244. And all I do in there is I start looking at them. There was a little bull flag, OKLO. But like I said, you're a little late in the party, and I like to combine it with a MACD, and they're getting overbought. But at least it shows you what we're talking about. Now, this is where it becomes an art, not a science. Remember, I said I'm not using a squeeze on an hourly. If you used a squeeze on an hourly, and I just can't stress it enough, that there's no magic bullet. You got to combine a lot of factors. But you see that squeeze? But it didn't break up. So you don't trust it as a bull squeeze if it doesn't break up. It looked okay, but it didn't break up. Then it looked good. And like I said, I'm not using an hourly squeeze. I'm using a 4 hour. And the 4 hour is still in a squeeze. This could go to 30, but it's already overbought. I'm just telling you, this is how they popped up. Rocket Lab, we just talked about that as a bullish idea in the other room. Bull squeeze, 4 hour consolidation. Now, some are going to look like tighter consolidations than others, but that's how we find a lot of them. Vroom, there's one for you. So it's a pretty handy scan. So just take the scan and change it from 3 to 30. Now, you might ask, why do you want options? And I'll show you a perfect example. ACHR. They have weeklies. Yeah, the 7s were 40 cents. I didn't buy them. They're $1.40. But the point is, let's say the stock was $7.40. and you want to buy the 7 calls because you think it's going to break out this week. So you buy them at 47 cents. So you buy a 10 lot. That's $470 you're laying out. And that's your maximum risk. Let's say the CEO gets indicted, stock goes to a 1. All your risk is $470. But it's a 1 delta because they're in the money. So if it goes up a point, they go up a point. On the other hand, if you bought 1,000 shares of stock, it's $8,000. Holy cow, that's a lot of risk. So that's why I like stocks that are optionable. So that's why I like them. A lot of bang for the buck. And a lot of what I do is about looking at the worst case scenario. You do not want that kind of risk. So you don't want to wipe out your account on some black swan event in an individual stock. So that's why I like options. So, or option spreads because you're laying out more money, less money. Plus, if you see 5 stocks with good trades, if you lay out $8,000, well, you might not have enough money to build a portfolio. So I'm just showing you because maybe not everyone goes up. So like I said, if you go over this, you got the Rocket Lab, you got TPC, but then visually inspect it. So when you go to a 4-hour chart at TPC, what do you see? You see massive resistance. So that's off my screen. But ACHR, there's no resistance till 9. That's a darn good risk reward. So now we played Datadog and we played First Solar, so I didn't play everything. Did First Solar have something? It sure did. Look at that. Plus, it had a nice trend line here. But we weren't sure when it would go up, so we did another one that was a spread that we made 50% on. So, because you don't know when it's going to break out of that. My theory was when the markets were going down, this already was making a higher low. And that's why we played that. Datadog, the same thing. So those are good squeezes to know. Now, nobody's asked me the second part. I know you probably only think a squeeze is to the upside. No. A consolidation can be on the downside. If it's in a downtrend, then you're looking for bear squeezes. So just turn it around. So like on the floor, we had trading cards that had buy and sell on them. One side buy, one side sell. So if things turned around, you always said, oh, let's turn the card over. So, but let me show you. So we don't want a $3 stock. We're not going to trade at $3. Let's take 50 to 1,000. But we're doing different. Now what we're doing is now that the markets have done this, we're looking for stocks that are doing that. So when 2 days ago or 3 days ago, we were saying if a stock had relative strength and the market had another leg up, they'd be the first to go up. Well, now you look for stocks that have relative weakness. And if the markets come in a little, they'll be the first to go down. So you can take my main list or all stocks. We'll take my main list. It's pretty similar. 4-hour squeeze, 1 hour is less. Is less than or equal to. So now we're looking for stocks in a downtrend that have a 4-hour squeeze. So now I'm not sure you'll have any today, but let's look. So all we're doing is reversing this. There, you got it. Well, IBM got nailed. Pepsi got nailed on earnings. Target's in there. NextEra Energy, ISRG. Let's take NextEra. Utility. Does that look like a squeeze? No, that's what I'm telling you. Every squeeze isn't a bull or bear flag. If you get something that doesn't have a real pattern, you're more likely to be disappointed. Did this have a squeeze back here? It sure did. If you visually inspected it, did it look like a bull flag? It sure did. Was it over the ATR trailing stop? It sure was. How about this one? That was a fake out. Yeah, squeeze in a sort of downtrend. That's a tough one. Now, when I see that and you have that fake out where you would have bought, well, number one, it didn't look like a real bull flag, but go to one time period farther. Was it in a longer term downtrend? It sure was. So I'd like to go to a daily chart when I'm shorting. So I'll show you. We're going to take this again. We're going to take a 4-hour, but a daily under the 50 moving average or something. We want something that stayed in a downtrend. I'm going to take an hourly squeeze. And let's just see. I love to do this. This is what I'm doing all day, trying to pop out stuff for everybody. Fresh Pet is in there. That's a active stock, a 1-hour consolidation, possibly. Remember, not just because it's a squeeze doesn't mean it's a tight consolidation. And the close is less than the ATR trailing stop. But guess what? I'm going to take that off and show you something different. I'm going to add the moving average. All of these things are just on Thinkorswim. The close is at least 1% below the 50. That's it. You can manipulate these any way you want. But this is the way we find ideas. You have one. Now, we already know United Health looks awful. So not a lot in there. So, but let's look. We're going to go back to here and show United Health. It's got a 1-hour squeeze. Does it look like a squeeze on a 1-hour? Well, sort of. Sort of looks like one. But whether it's on the upside where I showed you there might be limited upside on a stock, you better be sure whatever this is not against massive support. It is. It's against massive weekly support. So it might be a bear flag, but I'm not playing it. And I'm not playing it because it's got too much support. A bear bull flag against resistance or support is less likely to work. That's all. And by the way, we also go on relative strength and weakness. Now, what do I mean by that? Well, let's put it this way. If the ES was up 80 and Home Depot wouldn't go up, here we go. Then if the ES sells off, the ones that were already going down are going to go down more. And that's exactly what happened with Home Depot. Look at that. It just died. Deer refused to go up when the markets went to new highs. So if I was in the chart patterns room and I think the markets will reach their upside objective, I'm going to look for what refuses to go up to play to the downside. That's different. That's relative strength stuff. But this scan is handy. Let's go and put Fresh Bet back up here. That to me looks like a non-event. Looks terrible on a daily. Looks terrible here. Remember, just because it has a squeeze does not mean it's going up. Squeezes work both ways. Number two, just because it has a squeeze does not mean it's a bull or bear flag. You have to take each one individually. Now, you might say, yeah, but on an hourly, it's a bull flag. Yeah, it's a bull flag in a downtrend. Not as trustworthy. So just want to let you know that. Now, with the markets doing what they're doing, that they're going bonkers, I'm not going to find a lot of stocks that have a 1-hour squeeze under something. I'm going to have to take a 15-minute. So if I'm right, the markets are going to do this, which they have. They're going to start selling off. They're going to have a little rally to test the high a little later today. I'm looking for the stocks that don't bounce, like you saw Home Depot. So let's see if any of these come up. Yeah. So they have a 15-minute squeeze in a downtrend. But let's put a 4-hour. They're still in a downtrend. Yeah, 5. That stinks. But let's go take Dick's Sporting Goods. Does that look like a bear flag? No, that doesn't look at all bearish. We're trying to find bearish patterns. That's what we're trying to do in that case. So I call it think or swim. Good question, Veronica, in the YouTube. Just swap. I mean, but they use the think or swim platform. But no, that's what I mean. Sorry. But you see, it doesn't look bad. So what else is in here? How about Starbucks? That doesn't look bad. It doesn't look like anything. Remember, if it's a bearish pattern at support, I'm not touching it on the downside. So you could see, you could have a 1 minute squeeze. You can have all sorts of them. But like this, you have a 15-minute squeeze. But is that bullish or bearish? It's nothing. So just wanted to show you that it's nothing. So a lot of times what I'll do, if it's like this, stuck in a zone, the first thing I do is I look at the individual indexes. Does the individual index look bad? No. Is there anything that looks bad in that? Not yet. It's getting there. I'm talking about a 5-minute right here. Maybe. And in a minute, I'll show you the difference between the 5-minute NASDAQ today and the 5-minute NASDAQ at 10:30 yesterday morning. But none of this looks bad yet. It's up against resistance, but no semblance of a reversal. So I'm not really looking for bearish patterns yet. So, but when you go into my main list, and like I said, even if we go down, there are going to be some cheap stocks that bring up the rear and start going outperforming. Probably Soundhound is in there. Let's see. Yeah, there you go. Because they're starting to go for the cheapies. They're still in a downtrend, though. If you're going to play cheapy stocks in a downtrend, you got to shorten your time frame because they're still in a downtrend. You can take the little trade like here, but you better get out quick. So just that's how we do it. So at the moment, not seeing a lot that I want to do on the downside whatsoever. I can take everything on my main list, which is most of the active stocks, the Cyberonics, the Visas. And you see they just don't look bad yet, but they don't look that good either. They're stuck. Those are our favorite to do neutral trades. Those are our favorite. So let me just show you on the overall indexes when it looks good and when it looks bad. And when I talk about nothing looks bad yet, let me show you what we're talking about. Now, we're getting up to resistance. When we get near resistance is when I'm looking for a reversal pattern. But the more horizontal trend line reversal pattern, the more important. It's not that big yet. So let me just show you. We're going to take off. That's okay. So we're going to take over here the NASDAQ yesterday. So I'll put NDX. And I'm going to show you a 5-minute chart yesterday, not today. See that? There you go. So that's what happened yesterday. So now it doesn't have the same structure yet. It's close, but that was yesterday. We could take the NASDAQ, the 24-hour NASDAQ. I could show you that as well. Here's the 24-hour. And here's your defined trend line. See it? How about on the right? Does the NASDAQ have a defined trend line now? Believe it or not, yeah. Starting to form it. But if I'm going to play anything to the short side, anything, it better be something that already is acting poorly. That way, if this has another leg up, the stocks I want to short already look bad. So they might go down anyway, but they will underperform the market. That's the theory. So you can see it in here. There's a number of stocks that refuse to go higher. Visa, Coke, Deere, Home Depot. So the theory is that if the market does go to a new high, they're already acting poorly. And if the market really does roll over, those will be the first to really underperform. So that's how we trade. And to give you an idea now, what do I think? Well, I think up at that 55 is about it. And the reason is, and I'll show you a couple of reasons. Number one is the massive resistance. So number one is the massive resistance right here. Massive resistance. Doesn't mean it can't overshoot it. In a bear market rally, things have a habit of overshooting. So we don't have a semblance of a reversal candle. You did here. And somebody asked, what do I mean by candlesticks about big reversals? You got to see a big candle. So if I see a red candle take back half a green candle, that's a dark cloud cover. The biggest mistake I see of interpreting candlesticks is a lot of people looking at every candlestick. You just can't look at all of them. You're going to have, dark engulfing patterns on tiny candles. You're looking for big candles. And you're looking for a green taking back half a big red candle. That's called a piercing pattern. So now you don't have anything. Nothing. It's just sitting there. Could it overshoot? Sure, it could. So, but where do I get really, really where I want to do a swing short? Well, I don't have a reason yet. Like I said, you're getting up near resistance, but in a short squeeze, it could overshoot to that gap. It could. I'm not saying it's going to. Right here, well, you look for a reversal pattern. We don't have one yet. So I'm not doing a darn thing in here other than trying to find opportunities short term. Does the 15 look bad on the right? No. In fact, another way I've watched a lot of traders lose money is saying, oh, it's a rising wedge. Well, for a year, you had a rising wedge on the SPX. Everyone failed. A rising wedge does not matter a hill of beans to me. It's the break and the consolidation under it. So I don't anticipate that. So let me show you this on the left. Do you see any semblance of a 15-minute reversal over here? Yeah, it broke and consolidated, and actually you had another play on the downside. Now you don't have anything. So that's why I'm not doing any more trades. I don't see the trade to do right now. Like I said, we're up against resistance, but I don't have enough reasons to go and do anything. Now you're up against resistance and you've hit it so many times. You might ask, well, doesn't that mean like if it gets over it, it's going to here? Yeah. If it goes to there, great. I'll still look for a reversal pattern. We just don't have it yet. Usually in this, like I showed you, if this is similar, this sentiment cycle, and we're here, you're going to see most sentiment cycles over 100 years, this right here, and then this futz around coincides with a MACD or an RSI 2 oversold. See the oversold? Usually the next leg down is when that MACD gets overbought. This is just a 3-10-16 MACD. So it's a 3 moving average, the difference between the 10 and the 3, and then a 16 moving average of the red line, which is the blue line. So that's what we're watching. We want to see this over zero again. We want to see it get overbought. And I'll show you. Let's just go back and I'll show you way back. So we're going to take the S&P on a weekly, and most sell-offs like this one, almost everyone had to get overbought before the next leg down. you needed the overbought. Most of the overbought show you with a follow-through candle to the downside after indecision. Look at that. That's why we short on the way down, or we buy on the way up. I watched too many people blow out the last 3 months buying on the way down. We want to buy on the way up. Look at this right here. That's where you buy. Now, if you want to average down at support, that's fine, but a lot of times it overshoots. Remember, to me, it's about drawdown. So you could have been right eventually, but if it went to here, you might not have any money left to participate. So you want to use your money wisely. And to me, that means taking immediate gratification. If you buy there, you're offensive. You're not even thinking of getting out. If you buy here, you might get out here because you're thrilled you came out. If you bought here, that's what resistance is all about. If you got stuck right here, if it comes back to it, you're thrilled to get out. That's why prior support becomes resistance. So you'd rather buy on the way up. It's hard because like Datadog, I watched every tick of Datadog. But luckily we got out here. Should I have stayed in? Of course I should have stayed in. I mean, in hindsight. But you're still buying on the way up. So in fact, another way to do it, this is a little more risky, is at least buy when a candle is higher than the candle of the day before. At least you have that. So you're going to see, even here, candle was higher than the day before. How about here? That one was, and you would have lost because it's still in a downtrend. But I just want to show you that. At least if you bought here, you have a stop down here, you have a tight stop. If you buy here, you have you have a loose stop. You're going to get yourself killed. When in a downtrend, if I'm buying, I better see a defined bullish pattern. So that's what I'm doing. And like I said, nothing looks bad yet. I would like to find some cheaper stocks to buy, figuring that they'll bring up the rear. I mean, that's how it looks to me. So that's what I'm doing. And like I said, you sure could break up. Sure could. You could go all the way to here. Like I said, if it's similar at all to this sentiment cycle, it's going to futz around and try to attempt to go to those lower areas, which would put this at those lower areas. So you work off the weekly oversold by going back to that area. So that's why I think you're going to have a slow drift up for weeks. And that's why this is going to be a great premium selling market, but it's going to be better up here where you have massive resistance. In here, it's sort of purgatory. So that's where I am. And this is the problem if you try to do something neutral, let's say in Meta. The problem is if the markets break up, all of these are going to play catch up. So even though Meta is acting much worse than like Netflix, and Apple's actually much worse than a Netflix, if this goes up enough, they're going to play catch up as well. So I'm not doing anything in any of these stocks. We took a profit in Home Depot, and that's about it. And so, besides that, I don't see the trade. So not yet. I'll try to find them for everyone in the chart mastery, but I don't see it. So Netflix, yeah, it broke out. No reason to short that. That was acting better even before the market sold off. I mean, before it started rallying. So if that went up, on earnings, even when the market sold off, then if the markets are rallying, theoretically, it should lead the markets. And that's what it did. That's a bull flag right there. Now, it's hard with $1,000 stock, but look at all the bull flags over the ATR trailing stop. So pretty cool. But I don't see I wouldn't touch Netflix. It's hard to buy at 1,050. It's really hard after it's had such a rally. It was just, it doesn't matter where it was. It's where it's going. But if you did, you probably played around, you're selling out of the money put. Because the puts were so expensive. And like I said, if you get up to these areas, up in the upper echelons of resistance, like I said, this could easily go to here first. Right there. Now, I know you might say that's a bull flag. Why isn't it going to go up by that amount? Because there's too much resistance. A bull flag against resistance is not to be trusted. It might work, but I go on percentages. A bull flag in an overall downtrend is not to be trusted. We're in a downtrend. So this could definitely overshoot. That's what bear squeezes do, short squeezes. But in the meantime, I will look for stocks that stop going up and are already forming tops. Right now, nothing. I'm not doing anything. I don't see the reason to be a hero. Well, that's a good question, McDonald's. Is that a bull flag? It's a great question. Well, the problem is that it's outperformed so much because it's a defensive stock. On a weekly, you got that resistance at 320 and then nothing. Yeah, and the problem is, here you go. It's not doing much today. Do you anticipate the flag by playing something over the market? Because really, in the grand scheme of things, it's down today. So what do? I don't do a thing. Now, if all of a sudden the ES is only up 68 and this is up here, that's different. Then I play something over the market. But yeah, I mean, that's a good example of a possible bull flag, but it's a bull flag against massive resistance. That's the problem. A big old reversal candle like that, it's hard to reclaim that. But if this didn't have this and was just clear sailing, sort of like that, look at that. There was nothing overhead. Now, you might say, how about that one right here? What happens if you would have bought there? Wasn't a bull flag yet. It was too sloppy. So that's the only problem, is that resistance. So keep that in mind. So the other ones, those are somebody else is doing those on a different site. So I'm not going to go against them. What do I think? It's up against resistance. That's all. But like I said, there are other sites doing that. I don't see the trade. It looks like McDonald's. It's at resistance. Over this is a better buy. So, but you see, over this, there was no resistance, even though it faked you out, but it still had no resistance. Now, I don't have a feel for it. So theoretically, it'll go up like everything else, but I don't see the setup. And to me, the problem with doing other trades like Home Depot is now you got to worry about the catch up. Are they going to sell the MNST and the McDonald's and the Coca-Cola to buy the Home Depot? To buy Google. So are they going to sell the other ones to buy this? I don't want to overanalyze it, but those are definitely the MNST and McDonald's having the great relative strength. But did they only have good relative strength because they were defensive stocks? Now, you might ask, why did Pepsi go down if that's a defensive stock? Because Pepsi sources their materials a lot more overseas than Coca-Cola. So Coca-Cola says that theirs are sourced in the U.S. and like Puerto Rico. So that's why Coca-Cola is outperformed. So it's a big question of, do the Johnson & Johnsons and the Philip Morris and the Verizons that have outperformed underperform now if the markets keep going up? So I don't have the answer. I wish I did. Now, an interesting thing is Costco considered a defensive stock? Now, you would think that this would fill that gap in this type of environment, and it still could. It's got its dividend beginning of May. So this is one I'm going to look for as a long idea, but not today because it won't go up. But look at that on a 5-minute. So even though it's underperforming, and even though it was 6 points lower, it's $1,000 stock. Does 6 points really matter? So I'm looking at that as a long idea. So of those MNSTs of the world, this I think looks better. That's sloppier. But here, answer your question, over that, it could go to here. And then if it gets over that, to here. But those are all at 20 or 30 cents. It's over that it gets exciting. But that's still only 40 cents. That's why I like Costco better. I just don't know how I'll trade it yet. So that's what I'm doing right now. Now, I will tell you, longer term, I still think that we do this. Let me show you 1980. So in 1980, all you did was this. You sold off after the election. All that's been posted on Stock Twitch. We're very much mirroring what happened when Reagan got elected with the old Reaganomic stuff. Deregulation, tax cuts. Everybody thought the market would go up. It went down for 18 months. You had the sell-off, the futz around after the first panic, the discouragement phase. I was on the floor. I know people were discouraged. And then the defined breakout. So similar to what I showed you is going on now. You got the rally from the oversold weekly, the failure at resistance, another leg down, then a rally to resistance. But now it was starting to develop a defined trend line. As opposed to now, sure doesn't look like a trend line to me. Looks like it has a lot more damage to repair. There's a good trend line. There's a good trend line. So it takes a while to repair that damage. So take care. Thanks for the great questions, and have a great rest of the week.